Hey everyone, this is Ryan B with Practical Forex Trading, and this is your weekly analysis for gold versus the dollar. So the price of gold versus the dollar, XAUUSD. If you want to stay up to date with all of our trading videos, make sure you click that red subscribe button on the bottom right hand corner of your screen. So what we're looking at is the daily chart for gold, and obviously you can see this is an uptrend, right? So for any beginning traders on this video, once we see a sequence of higher lows and higher highs, that confirms our uptrend, forming the pattern we see here, and calling it bullish. Also, another indicator we have placed in this chart is the 20 period fast moving average. So one trading strategy is if price is moving on top of the fast moving average, it's a buy. If it's moving below, it's a sell, etc. Simple logic, but usually does a pretty good job. We can see here that over this course of this uptrend, every time price comes back down to falls below, really what you don't want to do in an uptrend is spend too much time selling. You want to wait for these opportunities where price cools off to, in fact, buy again. And then once price crosses back over the fast-moving average, that's your buy signal. So you can see that happen back here in the end of June, and price, every time it's visited this fast-moving average, has successfully moved farther away, no exception being on Friday. We can see a nice bullish candle here that developed Friday. Every time you see these red candles form, and like, oh, is it a sell-off? And in fact, it's just giving you a better opportunity to buy at a better price. So as long as we're staying here above this fast-moving average, that's a buy signal. Also, this 1775 support and resistance zone, this is historical significance. Past few weeks, months, we've been talking about that. Now price is held above that line. And that's significant because it's one thing if price moves into a resistance area. It's a whole other thing if it stays there once it's reached its ground. So we can see that's in fact what's happened. We hit the solid bullish daily candle. Let's go ahead and zoom in. You can see my price target is 1925. So why 1925? So there's our weekly chart. Wow, look at that. That's a very bullish setup, right? We're moving well ahead of the fast-moving average in the weekly. And my 1925 target comes all the way back here from 2011. And now that see here how before price, every time I tested this, would fall back. Now gold has definitely broken through that. This trend line is steep. At some point it's going to yawn over, but right now we're hot. And so we see here 1925 was our peak from 2011. So the first thing price is going to do in an uptrend is try to develop a new high. So a couple scenarios are going to happen. It gets to that price, and then people sell and it falls off because they're getting nervous and will go higher, or we see a shot all the way up to $2,000. Very possible. But then usually what happens is the big pinnacle is reached, and then everyone sells to take max profit, waits for price to cool back down in the dip, then buys again, just like we see in this pattern. And now that we see the long view, see how this trend face is super steep right here? But really what's going to happen eventually is this big trend called the baseline trend formed there. And then we've got a parallel trend line that's operating like this. So you can see how price moves below this line or above, comes back and touches it. We have these parallels. So if we go ahead and draw our next parallel, you can use your parallel trend tool. Click, click, and drag. We want to make it about the same size as the lower trend channel. So we can see here that price is moving well above, but even if this steep face broke over, right, it's not a sell. It just means price is going to cool off, catch up with the moving average, let the moving average catch up, and then it's a buy. But now that we've established this price, we're staying above resistance. Even if price were to come back down and squeak into the 1700s, that's a buy right there, and probably the best price you're going to get if it comes back down there. Otherwise, we'll see price continue all the way to 1925. Then I'm guessing that's when we'll see our first decline to here, be another buy back around the $1,800, and then we'll shoot for 2,000. All right, everyone. Well, I hope you have a very profitable week trading, and we'll talk soon.